All right, we're going to do part 2 of FX, how the FX market works. And it's very, very good timing that we did the Euromania. Is that what we called it? Euromania? How the Forex market worked a couple weeks ago? Was it last week or a couple weeks ago, Ken? And boy, the yen has really, the FX market has been pretty good to trade. Augustine's been trading with the new indicators, so I'll bring him in a little bit. And what we'll do is spend a little bit of time on that, and then we're going to go on how the FX markets work and do a recap. And we'll talk a little bit about not only the indicators, but some of the small changes that we've made that you can make to make it a little bit easier on the eyes. Augustine, I hope you have your Ninja up and ready to go. If you could do that and give us a quick walkthrough on how you have it set up, that'll give me a little bit of time to open my TradeStation and then show the TradeStation version. Again, we're going to do real quick what we did this past Wednesday, and then we'll move forward. Are you ready? Can you do that? Augustine might be muted. Can't hear you, Augustine, if you're ready.
Joe, I'm here. I'm here. I'm ready. I'm ready to go.
Go ahead and take control of the screen, and then I'll close my other TradeStation out of my other platform, bring it into this one, and I'll take it from, once you finish.
Sounds good, Joe. Let me see. Where is that button?
Timing couldn't be any better, huh, Augustine?
No, it cannot be any better, Joe. You killed it with the timing. Okay, can everyone see my screen?
Yeah, I see the white. There you go.
Okay, so this is the actual workspace.
Before you continue, how'd you do with that soy trade?
It ended up hitting profit.
How much did you make?
It ended up taking profits.
How much was it good for?
It was good for 187 bucks.
So I guess you owe me 90 bucks?
187. I owe you 90 bucks, Joe.
Okay.
I owe you 90 bucks. So this is the workspace that I have been sending out to the members. You have, let me reload all the historical data so I make sure everything is live and working properly. Okay, the workspace that I've been sending out, it has the Architect, and a chart. They are linked to each other. And the three columns that we have been talking about in part 1 is that, well, we all know, we are familiarized with the concept of risk on, risk off. We introduced the concept of carry trade, and we have introduced the concept of FX up or FX down. So on the top right corner of my Architect, I have the correlations between the 10-year notes, between the yields and the dollar index and the dollar cash. In the carry trade column, I have the relationship between the S&P and the yen. In this column, I have the relationship between the S&P and the 10-year notes. And right there, we have our three benchmarks and the yen, which it works very close to one of the benchmarks, which is the S&P. The next column right here in the middle, it's called the range box. It's to determine whether or not we are trading inside the box or outside of the box. And then we have our typical next stream 8 hours, 3, next stream 8, 3, and 1 hours. On the top end, I have the currency futures. The currency futures. The good thing about analyzing currency futures itself is that when sorting out velocity leaders, it does a better job than if you actually have all the measures by using 4x. The reason is that, for example, the dollar CAD, if I put the dollar CAD in here in this group, the dollar CAD is going to be green across the board. It's going to be green across the board, so matching the velocity leaders is going to be more challenging. The reason is because in the dollar CAD, in FX, the CAD is the base currency, while in futures, in all the futures, the dollar is the base currency. So in matching leaders and laggers, it is easier if you actually analyze futures. Even if you're an FX trader only, you're better off analyzing futures, especially for next streams 8, 3, and 1 hour. Okay. If there's any questions with that, please let me know. All right. So that's just the components. Those are just the components. On the bottom, I have the forex pairs, the crosses, all the crosses. Why do we have the crosses here? The reason why I have the crosses here is for example, let's go over what's in each column. I'm going to bring my notepad. I'm going to bring my notepad. And I believe we did this. Where is it? FX flows. Where is it? The notes. This is what this is just a draft of what we were working on, which is the sequence of analysis. The sequence of analysis. Step number 1, we had to analyze the macro. That's what part 1 was meant to, which is analyzing the crossbox. Analyzing the crossbox. In the crossbox, we're going to determine leaders and laggers. We're going to determine which are the outperforming assets in the macro perspective. That's the first layer of analysis. Second layer of analysis is the outperformers, the day outperformers, in which we're going to go over the next streams, 8, 3, and 1 hour, right? 8, 3, and 1 hour next streams. That's where we get the outperformers for the day. Then we have the column of risk on, risk off, carry trade on, carry trade off, FX up or FX down. I'm going to what's inside those columns is in the carry trade column. We have the relationship between the S&P and the yen. We want to know if the S&P is moving in polar opposites with the yen and vice versa. So the yen, it's a currency. The yen is a currency, and by that I mean that if the S&P, for example, is going up and the yen is going down, the indicator is going to show carry on, means that the yen currency is weakening as the S&P is strengthening. So by knowing this, it's very valuable because we can match the currency, a weak currency or a currency that is going down, like the yen in this example that I'm presenting. We can match that with a strong currency, and that's how you build a cross pair with the yen. So by looking at the carry trade column, we are going to be able to not only trade the yen, not only trade the S&P, but also, if you're a forex trader, you are going to be able to find crosses with the yen, a major with the yen, or an exotic versus the yen, the strong versus the weak. So it is a very important histogram for us to look at and a correlation for us to consider, because sometimes with the S&P we can trade these crosses and we can use the S&P as a benchmark. And sometimes those crosses are moving a lot faster than the S&P. So why would we trade the S&P if a cross with the yen is moving a lot faster, meaning more pips? So that is one of the advantages right there. The next column, the one on the right, FX up or FX down. I'm reloading all the data. It's going to come up anytime. The next column, the FX up or FX down, has the relationship between the treasury yields and the dollar index. With that is when we determine whether we're going to be going long or short FX versus the dollar. We're going to use the dollar as the benchmark, and we're going to trade currencies against the dollar, either to the upside or to the downside. The way we built the architect, FX up, it is in the perspective of the foreign currencies. So when in FX up, we need to look for long plays in the euro, the pound, the Canadian, the Aussie, the New Zealand, the currencies against the dollar, When in FX down, it means that we need to look for shorting opportunities in the currency market against the dollar. Okay, as the chart populates, it's still loading data. Then we have the range box. Joe, do you want to go over the range box, or do you want me to go over the range box? Okay, well, Joe comes up. I'm just gonna, well, this also loads up. I'm gonna bring that's right, Benton. The TY is the 10-year notes. The 10-year notes. The TY is the treasury yields, or 10-year notes. The symbol in TradeStation is TY. That's why we have been going over we have used TY. That's the way Joe has been using. So in Ninja users, you're thinking about in TY, I mean the ZN versus the dollar. So that's for TradeStation users. Ninja Trader users is ZN versus USD. That's all. It's that and a couple more things. It's inside the code for that analytics. All right. So by going over the crossbox, let's say I go to the crossbox. I look for. I'm going to go to the crossbox. When I do my macro analysis in the crossbox, I'm going to be ranking them. I'm going to be making a list of who is the biggest, who is the strongest, and who is the biggest laggard. I'm going to go to FX. In the FX space, every morning when I read the quant report, I make a list. Meaning these are my FX pairs, right? I invert the symbol of the top three because the base currency is the yen, and I want the base currency to be the dollar, so I need to flip them, right? And then I group them up using the rankings. With a -2, we had this, we had that one, and we had that one, right? We had the pound. Actually, the strongest to the downside was the Swiss with a -3. So the Swiss is your velocity leader to the downside in the macro perspective. With a -2 ranking, we had three markets. We had the pound, we had the Canadian, and we had the yen. With a -1 ranking, we had the Aussie. And we also had the euro. Right? So if based on the macro perspective, I want to prefer selling the Swiss and I want to prefer buying the Aussie or the euro. I want to prefer that. That's the velocity leader to the upside. And this one is the velocity leader to the downside based on the macro perspective. based on the macro perspective, right? But that's in the macro. Our job, and that's when the range box comes into play, it's to determine, is the past matching with the overnight action and today? Again, you need to ask yourself in the mornings, is the past, is today's action matching the past? We need to connect. We need to be able to connect the past, the present, to predict the future. So the past is the macro perspective here, Quant report. For example, this is the pound. Since we did the pound this morning, let's use the pound as an example. The pound had a bearish breakdown yesterday, right? It had a bearish breakdown. So my job today is the pound continuing? Is the pound consolidating? Or is the pound reversing? Because if it continues, it has been one of the biggest, it has been one of the, it has a -2 ranking. It's almost one of the weakest currencies because the Swiss has an oversold condition, overbought in this case, condition, right? It's actually an oversold, the Swiss, I'm talking about futures, okay? I'm talking about futures. The Swiss, it's oversold. Well, the pound had a bearish breakdown. So my job is, I need to determine, number one, is the markets in continuation? Are the markets in continuation? Number two, are the markets in consolidation? Consolidation. Or number three, are the markets reversing? Reversing. Right? So that's when the range box comes into play. Guys, the indices are being sold off sharply. I'm not being part of this, and I'm just gonna go ahead and continue, guys. I don't know what's going on, but if
don't worry about it. You made your money for the day.
No.
Give a chance to some of the others. You know, don't hog it all up for yourself. Give a chance for some of the other guys to make money.
All right.
By the way, to answer Benton's question, Benton's asking TY, is it the 10-year notes and not the yield? Right, it's the notes, not the yield. They work inverse.
Oh, I didn't get your question, Benton. My apologies. Yeah, it's the opposite. So by using the range box, we're going to know whether we're going to have a good understanding whether the overnight action is in continuation, whether we are in consolidation, or whether we are reversing. If you see a bearish breakdown, and then on the next day you see the pound below, in the box, this category right here, in the box, where is it? May have to restart my Ninja, Joe. Just giving you the heads up.
Okay.
The range box is going to say in the box, out of the box, up, out of the box, down. If it is out of the box down, it means that if you had a bearish breakdown, you're most likely in continuation. You're most likely heading towards a continuation of the trend or of that break. So if you had a bearish breakdown and you are out of the box down, you're heading towards a continuation, and that's good. That's good. If it is continuing what it has been doing, why fight it through? Just keep doing it until it doesn't do it any longer. So continuation, that is a good thing. Consolidation means, okay, it's when we say it's in the box. It's in the box. It could be choppy, it could be consolidating, right? We normally see that after a big breakdown. They tend to consolidate. And the RQ Channel 7 does a tremendous job picking that up. So, bearish breakdown, that's the past. Our job is to predict what's going on and predict the future. So, out of the box down, it's continuation of the trend. It's continuation of the trend. Out of the box up, you're heading towards either consolidation or towards a reversal. So that is counter trend. Let's look at another example. The Canadian, the dollar CAD is at resistance. The Canadian currency, it's at support. Right? The flip side. So if it breaks the RQ channel 7, then we're breaking support. We are probably heading towards a continuation of that the most recent action of that market. Or maybe just it has been probably flat and consolidating and it's just breaking out. Maybe it is the first breakout. And then on the next day, you may see it as bullish breakout. And then on the next day, you use the range box to determine out of that breakout, are we in consolidation or are we in continuation of that breakout? So that's when the out of the box up or out of the box down come into play. And that is very important, guys. That is very important. When you start asking yourself that question, is the overnight action matching the cross box, and are we above the RQ channel 7 or below the RQ channel 7, and does that match the pattern description? Then you're connecting all the dots, the past, the present, to predict the future. And then trigger prices and all the rest of things come into play, but that's for another training session. But our first layer is around all this analysis, the macro analysis. There we go. You see how the range box for everyone, but you see the dollar, it's out of the box up, The yen, it's out of the box up. The Aussie, it's out of the box down. The pound, it's out of the box down. It means that this is most likely continuing. It's in continuation of the trend. Our next job is to determine not only that, but also the extremes, 8, 3, and 1 hours. 8, 3, and 1 hour. Richard, I agree. This really is fantastic. This really is fantastic. So, again, the out of the box up or out of the box down. Based on your macro analysis. Based on the macro, right? Based on the macro, market is doing this. Right? It's going up. Then you see the overnight action. The overnight action, and then you can look at the RQ7. You look at the RQ7. You have the box, right? You're gonna have the box. Let me move this higher. You're gonna have the box. So coming into today, based on the macro, your overnight action is here. Your job is to determine, are we in continuation of the trend? And that's when the RQ channel 7 plays a role. We are in the box here. If we are out of the box, up, by matching this with the cross box, then you're in continuation of the trend. And that is good. This is good, guys. This is good. This is very good. Right? Out of the box, no, sorry, in the box. Let's see if I can find one. Here, for example, the euro pound is in the box. ET box. E-T-box. It's in the box. So matching that action, we are somewhere around here. What does that mean? It means patience. It means that it's in consolidation. You may have trades inside the box. This is a clock. I don't know how to exemplify patience, but it means that it's just maybe consolidating, maybe taking a pause, maybe taking a break, maybe resting, right? And if the macro is bullish, right, and then you're having a break to the downside, then that is a possible reversal, in the making. So that's out of the box. This is out of the box. OT box down. And the one on top is OTB up. Out of the box, up. So you need to match this with the macro. That's your link. That's your time travel machine. That's how you connect the dots. Past, present, predict the future. So that's the out of the range box. Today the dollar broke out of the box up. We shorted the pound out of the box down. The pound had a bearish breakdown. And when we were doing that trade, the FX was down. We had FX down. Now we are in conflict. Now we're in conflict in the FX correlations. But we are having risk off right now. And as Jim just pointed out, they are selling off the indices very strongly. So now my next job is to determine, if we're out of the box, which one is my velocity leader. Right now is the euro, then the pound in 8 hours. In 8 hours. In 3 hours, the euro, then the Canadian, then the Aussie. And in the last hour, up until now, because this is dynamic, that's the beauty of this code, it's dynamic. It's dynamic, it's connecting all the prior candles, it's connecting it up until now. It doesn't have a fixed starting point. It's very neat, this indicator is very neat. The code inside this is very neat. I have that the euro is leading. So right now, my top choice would be, in case we were FX down, it would possibly be the euro, possibly. But right now, the money in FX is in conflict. The carry trade is also in conflict. And the risk on, risk off, we're having a very nice risk off scenario. So putting all of that into play, I have a chart, and the workspace that I've been sending out, the charts are linked. The charts are actually linked. So all you got to do is just click. For example, the euro we had selected, that was probably the best choice right now, and now it populates, and then you find your signal. As you can see, the last step, always the last step, is the signal. It is not the first step, it is the last step. We tend to make the mistake of looking for the holy grail signal, and we go places after places after places. Well, that is actually the last step. That is actually the last step. In signals, we have Gnostic entries, archi-channel breaks, we have automation, we have momentum break strategies, we have trend style strategies. That's the alpha signal, different alpha signals. And there's your break in the euro. And there is your break in the euro. Those white dots, that's prior day's lows. Archi-channel entry, 7, break, boom, little test now. But right now, FX is not the best place. Actually, FX, not FX. We are having now risk off, so I should be really cautious with FX at the moment. You may not have that much follow through. So that's one thing. The next thing is crosses. Assuming the column for carry trade is on. If carry trade is on, let me bring up the yen, for example. Let's bring the yen up. It would be great to show this live, but it is not what we're having in the market at the moment. But in case we do, we're actually about to go to carry off. We're about to go to carry off. That means that the yen and the S&P, there is an unwinding of carry trade positions. There we go. You see that carry off? It's starting to populate. It is starting to populate. It should adjust in all of them. Right now I'm using too much memory in my computer. It's probably lagging. But usually when one changes, actually, there we go. We officially now have carry off. Carry off means that the yen is strengthening against the S&P. is strengthening against the S&P. So this is a very good indicator. Why? Because if you know that the yen is strengthening with the S&P, you have a strong yen. What are you supposed to do? We have just done the work, right? We have selected that the euro at that moment was the best, was the weakest of all the currencies. So looking for a cross pair with the yen, it involves matching the strong versus the weak. So if the yen, if we are in carry off, it means that the yen is strong. It means that strength in the yen, weakness in what? In the euro, right? So I'm going to go to an extreme 8 hours and I'll find the euro yen. Where is that euro yen? The euro yen, down here at the bottom. Down here at the bottom. Biggest laggard in 8 hours. Biggest laggard in 8 hours. Is out of the box down. Is out of the box down. So primarily, there we go. Actually, this market has done its thing, and this market is finished. It's finished.
You know what you may want to look at, August?
Which one?
Sorry, you may want to look at the dollar, and see if the dollar has tapped out. See if the dollar has some over bought markers. See if it has any retracement markers. If it does, then you might get a little help from a pullback. A little pullback in today's action in the dollar might help the yen go a little higher, as long as the S&P can try to break yesterday's low. I think it's close to yesterday's low. The Dow stopped right at yesterday's low. So, well, the dollar could still have a little bit of room.
Yeah.
Put it on a 30-minute.
Still have it.
See if it's potentially overbought in the 30-minute, maybe. Yeah.
It's overbought in 30 minutes.
Yeah, but I don't see a retracement marker yet, so that's not as valid.
What about the pound yen?
No, what I was looking
Pound yen
for,
all the way down.
Yeah, forget about that. That's done. What I'm
Aussie
looking,
yen.
what I'm anticipating is if the dollar can retrace and the S&P come down, that should propel the yen higher. It should, but it right now it's stuck there.
Dollar down. Say that again. Dollar down. S&P down. Right.
Yeah. If the dollar retraces from this recent push higher, and the S&P continues to decline, that should strengthen the yen.
Absolutely.
And of course, if,
Absolutely.
you know, the 10-year notes plays a pretty good role in here as well. The S&P, I mean the 10-year notes needs to trade higher as well.
Okay. So that's how you can build a cross pair with the yen by using the carry trade column. The carry trade column with the help of the extremes A3 in 1 hour for the rest of the currencies. There we go, carry off again. So we're back to carry off. Carry off, again, strengthen the yen. So the pairs against the yen, like Joe just pointed it out, if the dollar maybe just consolidates or takes a little break, and they can give a little room for the yen to go, that may actually help. That may actually help for the yen to strengthen even further. To strengthen even further. So what are the crosses against the yen going to do? Like this cat yen. They should head south, right? But unfortunately, it's beyond critical, so that market is finished. Euro yen, bottom of the list. Who knows? This might help the euro yen continue its way lower. The pound yen is finished, right? The Aussie yen. The Aussie yen was setting up. It was setting up. Let's see if we can do something here. Here's the Aussie yen. All right, it is a prior day's lows, oversold indicator. Let's take a look at it. Let's take a look in 5 minutes. And so we'll see now if the S&P breaks lower, the Aussie yen, you have your entry right here, may head south.
Look at the yen. Look at the yen. Look
S&P.
at the yen. Look at the yen futures. It's getting ready to go into bull territory.
Breaking the 2 and 7 channel, right?
Getting into close to bull territory, I believe.
Yeah, that's why the column is changing as we speak, and this is a great example. So it can be taped. We have seen how it has been changing from carry off to mixed, carry off, mixed. As long as the yen continues higher, we're going to remain in carry off. So that Aussie yen is setting up. That Aussie yen is setting up. So I'm trading the yen with all this. So all we need is one chart, as I was just showing. That's the reason why I linked them. So that's my entry, and that's my exit. One thing I don't like about this pair is that the time. It's Friday. It's almost noon. Tea time is over. So that's, and especially the Aussie and the yen. Especially the Aussie and the yen. Especially the Asian currencies that they are probably having they're probably on beer number 8 right now. So I'm gonna let them. I'm gonna take a look at this pair on Monday if we have the same conditions that we're having right now. So that's the way you build a cross pair using the carry trade column. Any questions?
Good stuff. Very, very good stuff. How are y'all liking this this class? I think it's got some great insights.
I'm going to throw my 2 cents in, guys, if I may. This is amazing stuff. Not good stuff, Joe. This is amazing stuff.
Isn't it?
It certainly is.
Oh, I forgot to mention, guys, I also included all 3 histograms, one on top of the other, already configured for using the rollovers. So I have on top the risk on, risk off. In the middle, I have the carry trade, and then on the bottom I have the FX flows. FX flows. That's another one. That's That's one more chart that I built. I mean, there is actually, this is the chart of the notes, as you can see here, but I hit the price, so you can only see the histograms. So by doing this, you don't have to have it on every single chart. So you can save up a little bit of room. At the same time, I did include one that has it in case you want it. In case you want it. So this morning when we were trading the pound, this morning, we shorted it while we were in. Let's do the breakdown of the pound. You see how the Archie channel 7 was here? This is how I connect the past, the present, and how I can predict the future. We broke out of the Archie channel 7 at 6:30 a.m. At 6:30 a.m. So here we broke below the Archie channel 7, and the range box column was OTB down. OTB down. It means that, hey, that had a bearish breakdown, and hey, I'm ready to continue the trend, or I'm setting up for a continuation of the trend. So don't fight it. Go with it. Go with the flow. Go with the flow. Then you find your signal. We did the risk-reward ratio. Risk-reward ratio today For that pound, we're aiming for a risk of $175 to make 370 to target 1. And the second one, we were aiming for a trail stop, and we were aiming a lot lower, thanks to the prediction of Jim and some of our one of the most, I would say, one of the most qualified members that we get to talk to every day. I don't know. There's a lot of people who don't contribute as much, but he definitely helped us out with looking ahead and how far this thing can go. So we were in it for a continuation. Some swing traders may consider holding this position even longer. Maybe some position traders are also going to do that. I don't know. But the box was drawn here, and we were below the box at 630. We were range box, out of the box, down, right? And not only that, it was the velocity leader to the downside. So we connected the past, the present, and we were able to predict the future quite well. When we were aiming for that short, the correlations at that time, I have the histogram on this chart, was FX down. You can see that the moment that thing broke, our market sentiment was FX down. No fighting with that. No fighting with that. That was the first break. We actually started to have our first hindsights of FX down early in London. Early in London, we started to have our first candles, red candles for FX down.
Histogram, you mean?
There's the break. The histogram, yes. What did I say?
Candles?
Yeah, my bad. The histograms, they were red. Then it broke out of the box in red. It remained in that condition. And I think the moment we got in, it was right after the report that the notes were going up, right? The notes were going up, and then they worked their way lower. We had FX down again, and it ran all the way to final target and a lot lower. So that was the breakdown of the pound. And the funny thing is that this happens a lot. This happens a lot. Not the funny, the good thing is that this really happens quite a lot. Now let's take a look at the euro. For the room's performance, I did not jump in the euro. I have made my money in the pound, but when I pointed out the euro was based under the same conditions. Under the same conditions. It didn't fall as much as the pound did, but it was another one to consider. I'm going to put it up here. Link it with yellow, so I'm in sync with that. I click euro so I can see the histogram. Yeah, the euro also broke down. Here is when the break of the box happened, and now we're below the box. We're below the box, having a little bounce at prior day's lows. That's what those white dots are. And are we going to have continuation? Well, we may. We need to take a look at the FX column that at the moment is FX, its conflict. Probably the notes shoot up after the room. Probably the notes shoot up after the room. Yeah, that's the reason why we lost it. But the money, it went from rotating toward from the foreign currencies to the dollar, or from the bonds to the dollar. Now the money is rotating from the stocks to the bonds. So it's long bonds, short stocks. That's the play that we have at the moment. We have risk off and carry off. Let's see if that follows through. I can just leave it there for questions. Yeah, nothing going on with the yen at the moment, but it surely is setting up nicely.
All righty.
Augustine, awesome job of presenting, man. Good stuff.
Yeah, very good
Thanks,
stuff.
Ken. Thanks, Ken. Thanks, Joe. No, I really love it. I really love it. This is great. I just wish I could be staring at this a little bit more. It's a little bit challenging. It's a little bit challenging to do this.
Well, that's why we need more eyeballs, and what that which we've been speaking about this week, which means we need potentially some of our members that like to trade the FX to be more involved, such as Jorge, and I think Mel likes the currencies as well, because it is sometimes challenging to run the room and look at all these markets.
The other night, Joe, I did the pound New Zealand, New Zealand. I took that one that night that he stood up.
Yeah,
I was testing. I was actually making the templates. I was preparing these templates, and then in the meantime, I saw that the pound that day was very weak, and we had a number from the Bank of New Zealand, and there you go. You have a cross, and you're able to spot these crosses very easily by just that was my trade. That was my trade. Boom, boom.
Yeah, that's great. You have it. I know you did 3 or 4. You've probably done more since we introduced the new indicator. What I'd like to do is take over, show some of the things that we need to cover, and then at the end, when I finish, you can come and show us how you did those trades.
Sound good? Sounds good. Sounds good. You let me know which ones.
Okay.
Okay. Should I make you a presenter?
Or show my screen. I don't know. All right, let me get the right. Everybody see this? All right, this is a very, very old presentation. Actually, it was our managed accounts when we traded FX in our managed accounts. But I'm going to use it. It's still so very relevant in so many ways. This is events trading, FX, and which I believe that's what Augustine traded. At least he just mentioned the New Zealand one. But there are those opportunities. Doesn't mean you have to stay up all night. Doesn't mean you have to be a London trader to take advantage of some of these moves. What it does require is for you to check, just like I do on weekends when I prepare the week ahead, plan out the calendar for the week. And if you have 2 or 3 key data coming out of Europe or New Zealand or Australia, sometimes even China, Tokyo, then it's a matter of getting up an hour beforehand, planning it out. You actually may want to even plan it before you even, way before, but get up an hour before, make sure you're nice and awake, have your cup of coffee, and you just trade the report. There's no need to stay up all night. London moves a lot with these reports. You think our markets do? Whoa, you ought to see the London session. So we had a managed account program that's all we did. Ironically, the gentleman that used to trade this for me, he worked with me for about 12, 13 years. He'll be back in town this weekend, and we'll be spending some time together. Just coincidence. He's going to spend the next couple days with me. All right. Outline of events trading. Central banks of the world. Now, this presentation was put together, I'm guessing around 2004, 2005 maybe. But there might be some dates later on, and we'll see. And still holds true today. Central banks of the world, key global economic indicators, the impact of interest rates, reporting times of major markets, risk aversion in events trading, and then applying automatic execution, which I don't recommend how we used to do it back then because of the way FX has gone in the last 2 or 3 years. They'll kill you with the spreads. They whiten the spreads. We traded institutional stuff, and we were able to get away with it for a few years. But there is a way to trade automated, and I'll show you that. All right, so the economies and the markets. Out of the U.S., the ones that usually move is the euro and the pound. Japan, all the crosses against the yen. Australia, you got the Aussie, the Euro Aussie. You have the New Zealand as well. Eurozone, you have the euros mostly the euro, the euro crosses. You can add euro CAD to that and so forth. We used to trade very, very large size. So here you're seeing the ones that had the least spreads or the most liquid. But you can definitely do some other ones as well. Pound dollar, pound yen, euro pound for London data, and Canada, the euro CAD and the dollar CAD. Economic indicators. An economic indicator is a statistic about the economy. Economic indicators allow analysis of economic performance and predictions of future performance. And if you remember, we talked about the different stages of the business cycle and of the economic expansion or contraction, and it's mostly based on this. So we may have an idea, or you may hear from different economists, even our own Fed, say that we are growing at, whether it's 2%, 1%, 1.5%. It's all about economic growth and hitting inflation targets. Back when this blue presentation I'm showing you was made, they didn't call it inflation targets. Inflation targets is a term that Bernanke came up with. Prior to him, Greenspan, it was growth targets. Okay, so a little bit difference in terminology. It means the same thing. So as these indicators come out, it tells us how these central bankers are thinking and how it might affect their policy. That's why you have seen us in the put up in the themes on Mondays for the last 2-3 weeks, and also in the past we've done it. Bad news is good news, and good news is bad news. And as these economic data come out, not just from us, but from around the world, then traders start adjusting positions, and they're doing it based on their interpretation of what the Feds may or may not do. That's why when I showed you, let me see if I can find it, hold on. That's why in that presentation I did the other night, I wrote in the blog 2 years ago, this was right after non-farm payroll back in March 2013. Let me see, did I write it? Back in December, the Fed made it clear that job creation had become its primary focus. So they had a decent employment number, I believe, and dollar started to strengthen. So everything is based, not everything, but understanding these economic indicators and how the Feds or central bankers will use it for policy, interest rate policies and liquidity policies is the reason why you see the markets react, especially the FX market, react to economic releases. This week we had very little, so we were depending more on the technicals of the markets. But there's going to be other times where you are going to have more data releases. So these are the biggies: GDP, inflation, employment, retail sales, interest rate policy, of course, trade balance, business activity, business data, housing data, business inventories, production. And at times you will get some FOMC members or some central bankers that will talk, and they'll, the traders will try to read between the lines, and it could move the markets. I'll skip that. That's too technical. There's something key here. The trade entry and exit prices should be set just prior to the upcoming news events. Automated strategy usually work best for mitigating human error. We'll move on. These are the typical times of reports. For the United States, 8:30 to 2:15. Japan, 6:50 p.m. to 11:30 p.m. Canada, 7 a.m. to 8:30. UK, 2 a.m. to 4:30. Eurozone, 2 a.m. to 6 a.m. And Australia from 5:30 to 7:30. And I've seen 9:30 lately, by the way. Here is an example. Okay, this was 2007, so this is when this was put together, guys. I see the date right there. I had said 2004, I think, 2005. This is 2007. This is before the financial crisis. This is 1 year before the financial crisis. And this just happens to be Einstein, so we used to trade. One of the trades that we used to, or one of the strategies we used to use for events trading. That happens to be the pound. That is the euro. That's a stop loss. That thing went in favor and just reversed. That is the dollar CAD. All these are FX. And I believe that's all that I have. So how do we trade events? Well, like you've heard us at times speak or talk about prior to inventories, storage, the first thing you want to do, and I guess what would probably be helpful here is if we go to a chart on whatever it was that Augustine, what did you trade recently? Was it the New Zealand? Or was it the Aussie? And what day was it, so I can come back and pull up the info?
Joe, I actually traded both, but I traded New Zealand with the pound, and I traded the Aussie itself on Wednesday, Thursday, London. So on the
traded
12th,
the report, right? You want to go ahead and show your screen so we could review it? Not review it, but you'll review it after, I guess after
I took the RQ channel 7 in the Aussie at 2 a.m. yesterday.
2 a.m. yesterday?
Yeah.
Oh, you traded yesterday again? You're talking about the day before?
In the morning.
Okay, yes, yesterday. Yesterday would make it...
Yesterday morning. So yesterday at 2 a.m. You go to the Aussie on the 12th. Early
You want to show your chart? I want to show the setup prior to the report. And then we'll show your trade. This is shooting from the hip. I haven't seen Augustine's trades. Well, was it the Aussie you said? I'm going to have to close one of my
the report,
trade
it was
stations.
it was the New Zealand report, interest rate decisions from New Zealand.
Hold on,
and
Augustine. I might lose
higher.
you. I'm on that machine that I'm trying to.
Oh no.
With the problem.
Oh no.
Yeah, it may close out my my GoToWebinar. I'm trying to shut down my other trade station. I have 2 workspaces up. Now I'm down to 1. Okay. Something is pending out there. Where is it? There it is. Okay, so Aussie dollar you said? And this was yesterday. So this is right here. No. It went up yesterday. Is that what you had along? Augustine? Did I lose everybody?
I think you have the euro right there, Joe.
Oh, I'm
Joe?
sorry.
Joe, you have the euro there.
I don't know why
So
it's not taking it now.
we have data from New Zealand, and we have data from employment data from Australia.
Yeah,
New Zealand data came in first, and then we have the Aussie data.
Hold on a minute. Yeah, this thing is pain.
Joe, you got to get those windmills spinning a little faster.
Yeah, I know. Give me a second, guys. It's not coming up. You guys hear that bell? Or is that just me that I hear it? Is this it? Augustine, is that it?
That's right, Joe. That is right.
All right, so this is the setup. Going back to where we were on the on that presentation. Okay, how do we set up? I mean, let me go back, see if I can find it. Whoops. When trends and risks are identified, the strategy should be implemented for that specific data release and report. Based on historical performance, the parameters should be set for the upcoming trading session. The trade entry and exit prices should be set prior to, okay. Automated strategies, all right. All right, so what does all this mean? Well, the first thing we're going to do is that we're going to look at it and say, where is the risk? When you hear us talk about risk of what? Risk of volatility. Is it to the upside? Is it to the downside? So the first thing that we do here, and I like to use, this is the 120-minute chart. We could use the 240. Let me change it to 240. I don't think it'll really be necessary, but Might as well do it with how we have the template. It didn't change. So the first thing that we want to do is that we want to be able to look at where is the risk of volatility. So based on this chart, this is the way we do it. First thing that we're going to do is that we're going to measure where's this thing coming from. All right. So we draw our box. You can see there the box. This is prior to the report. We had, didn't do it. This is the breakdown. This is where you're going to come into right in here. Okay. So where is your risk if you're looking at this chart like this? Where is your risk? And you're not always going to have an easy answer. A lot of times it could be either way. So the way that I see this is, depending on the report, this thing could go right back up to test the breakdown, which is this area in here, or it could have more follow-through to the downside, a trend continuation. So that's the risk, to the upside and to the downside. And of course, it could always go sideways. Then that's not risk of volatility. That's risk of lack of volatility, and that's where you end up not doing well. So the first thing that we do is look at where is the risk. Here you got a split risk. So if it does shoot up, where's your targets? Well, the box, right? Prior support becomes future resistance. So right there you got, this is a key level that you want to know about. And of course, you're gonna put in here your NOS levels, and for that we're going to have to go to the smaller time frame if I can find it. I have these charts all smashed in together because I am on one monitor and not three. So I'm going to have to look for my 30-minute chart. Do you see when this says Aussie? Sure don't. Here it is. It's just not linked. It's supposed to be linked. So we're going to come over here and change this. To the Aussie. And if we go back to, when was it, Augustine? The 12th?
That is right, Joe. Early in the 12th. It was an RT channel 7 break, and it ran like...
yeah, right here.
It just ran.
So
very fast.
Uh-huh. So so what are you trading? Well, or where's your risk of volatility? Well, you've got your risk, we just said, to both direction. Give me a second to find a pen to write on. Here we go. So you have the risk and your trigger there to the upside. And here is the risk to the downside and your trigger. Here we're looking for this level, but on the upside we're looking for that other level that I showed you, which is well beyond resistance, which is this area right here. Everybody get that? Everybody understand? So then what you want to do is once you measure your upside and once you measure your downside, what is your risk versus opportunity? The way that we speak about opportunity when we talk about risk is a little different than reward. Opportunity is not just risk. Reward is risk against your profit target. Risk versus opportunity is your risk against not your profit target, but where it may go beyond your profit target. That's why if you look at the manual of the CCAL, it explains it. In the CCAL, we're looking for not your first profit target. Great if it hits it, but we're looking beyond for those bigger trades. And a lot of times these event-driven signals can give you sufficient follow-through for the next few days where the opportunity is a lot greater than that profit target, the initial profit target. It was not the case in this particular trade, but when Chair Yellen came on, when she spoke for the next, I think, 3 months, her comments not only helped trigger the market, but it gave it follow-through for the next several days. Those are opportunities. That's risk versus opportunity. A little bit beyond the risk versus reward. Any questions so far on this? All right, so look how well this went. This prior high, prior Gnostic critical resistance, critical target happened to have matched pretty well with that box or that breakdown. That's pretty cool. And that was the opportunity. When you take this trade, here's your profit target. That's your risk reward. You also want to look at your risk versus the opportunity, not only to the next target, but beyond, should it be a pattern, should there be follow-through, rather, after that event. Benton, it should have been sent to you. But no worries, over the weekend I'm going to try to load it up to the forum section, membership section of our website. I'll try to do that this weekend.
Joe, it was sent on TradeStation. I don't believe it was sent on
Ninja?
On Ninja.
Okay,
no, I've not received it yet to send.
We'll send it to you. We'll get it to you over the weekend then. My apologies. I thought it went out for both, Ken. All right. So that's how you do that's how you look for a setup for events trading. Now, you don't have to trade the event. There is post-event trading. And what you want to look for there is follow-through. That's what you want to look for, follow-through. And when you do that, what happens a lot of times is that you'll have to plan out, look at the calendar, and if you have an important data that could move the markets, let's say out of the Eurozone, on a Tuesday, what's the next one? What's the next U.S.? What's the next out of Eurozone? And a lot of times you can plan these things out ahead of time, and you can, for swing trades, and you can a lot of times survive that consolidation after the breakout. Then you wait for the next report. You can trade it like a new report. You can trade it like a continuation. And as time goes forward, that's one of the things that we're going to be teaching you in the IQ room for this year. The whole idea for this year is to try to take some of these trades a little further for profit. So events trading with the calendar, as long as the technicals are not broken, it can help keep you in some trades. Now, Augustine asked me, would I keep something today overnight in the FX market? I said, no, not a weekend. Not right now, not the way the markets are right now. Anything can come out of Europe, right? Regarding Greece?
Absolutely, Joe.
And then the big profit that you saw in your pound can vanish pretty quickly.
Joe, going back to what you just said about that Aussie, just look at that chart that you have in the Aussie on the right.
This
Do
one?
you see? You don't need to. Yeah, you don't need to expand it. Just go to the fifth candle. You have a 5 accelerator. Do you see it?
This one?
Go to the fifth candle on the left, from left to right.
Yeah, right here.
No, from left to right. The other left.
Oh,
The
yes,
other left.
here.
Yeah, that one. That 5.
Other
You
left?
see the candle
I got two
before
left
that?
hands? I'm sorry.
I said the other.
I wasn't listening close to you.
So
I've been
you
told
see
I have
that
two left feet when it comes to dancing, though.
Oh, we're the same then. You see that in your background should help you out, Joe.
Yeah.
So actually, the report was actually on that 1 that you see there, not the 5, the 1.
Right here?
Prior to the 5, that 1, yes, that was the report, and the move came hours after that. And it was the typical crowded trade effect.
Was it policy statement? Was one the...
No, unemployment data from Australia. But hours before that, we had rate statement from New Zealand. We had it actually at 4 p.m. on Wednesday at 4 p.m. So the New Zealand shoot higher. I don't know if it has something to do with it, but that was the Aussie number, that 1 that you see. So the first reaction was to the downside.
Then it turned around.
And as you said, maybe it doesn't happen right away, but it can happen later on. And it was a strong move.
Those are the ones that I like to trade when it happens a little later. A little later, I mean, like 5-10 minutes later, once it takes direction. This thing on the 1 had it spike up. Then it started trading down, and it reached pretty close to your profit target, or should have been your profit target. If you were in it, you wanted to wait for that channel break, you would have never been in it, and then you trade the breakout. That's I don't know what went on there for the Aussie to turn around. I don't know if that had something to do with the dollar, or if it was all about New Zealand and Australia.
Joe, it also coincides that at that time the dollar index was actually breaking that upward channel that we had drawn in the lab.
Mm-hmm.
So it was actually in a little profit-taking mode after clipping 100.
So that could have been that.
That was another indication. Yeah.
But the Aussie's been outperforming. According to this, has been outperforming. I mean, look where the pound is. Look where the euro is. The Aussie's hanging in there pretty good. Look at it today. It hit that S1A, and if I'm not mistaken, the euro went through final target, final critical support, right? The pound, the euro. What else did? I don't think the Swiss did.
You're right, Joe. Everything but the pound shoot higher. Yesterday we were, shorting also the pound with Jim. I mean later on, but that thing went down.
All right, so that's my my part as far as events trading. It's what we didn't cover for part one. So if now you can show us your trades, your signals, your reasoning for these trades using the new indicators in FX, that'd be great. So you want to go ahead and show your screen and I don't hear you, Augustine. I don't know if you're talking or not.
Sorry, Joe. Sorry, Joe. I didn't mute myself. I didn't unmute myself. This Aussie trade is the one that Joe is talking about. I did it in London when I was building this template for FX, and at the same time I was playing with my new toys. I cannot say no to that. And during this time, even though we did not have, this is the Aussie. Let me bring up the Aussie. Here is the Aussie. We can see actually that the new indicator turned green afterwards, right? It turned green afterwards. The Aussie has been outperforming, as Joe pointed it out. It had been outperforming, and I did it with the idea of eyes ahead on where these things were actually heading. One of the acronyms of powers. When this was happening, that's when the dollar index. Remember the dollar index? We had drawn this upward channel. Now they have moved since after the there we go. We drew this upward channel during the room, and the 100 mark was clipped. Then it went higher. This is actually the June's contract. The front month 2 days ago was actually the other dollar index, and it looks much better there actually, in which it clipped, it hit resistance, and it came right back down. It came right back down. I think it was something like this. Something like that. So it reached the resistance lines that we were drawing at the beginning of the week, that where the dollar might be heading to. And then when it fell to trade higher, it was actually working its way lower. So the dollar index was heading at, I was aiming to the bottom end of the channel. I didn't know that this would happen, right? So from the technical perspective, the dollar index was at the top of the channel, failed to trade higher, and it was on its way down. Simultaneously, the 10-year notes yesterday, they had been actually moving higher. They have been on that area. This actually looks it doesn't look too clear. Let's see if I can I was with the eyes ahead idea of that we are going towards the opposite of Forex on, actually, which we did like a couple of hours afterwards. Not a couple of hours, a couple of candles actually afterwards. So when I was aiming, when the dollar index was doing that, the notes, they have been actually with green extremes throughout the day. They closed firmly, and they were actually trying to trade above the RQ channel 7. So I felt somewhat more positive that the notes, they were not bearish, they were not doing this. Then I would have probably think about it twice. So using the eyes ahead theory, the notes were already in bull territory, and all I needed was the dollar to go down, and the dollar had started to trade lower, when it reached resistance. So based on the FX flows, even though we were not there yet, looking ahead, we were going there, or possibly we were setting up for that. So that's in terms of benchmarks. Then, as Joe pointed it out, we had a report. Employment number, here. This was the candle. And the first reaction was to the downside with lack of follow-through. And then the Aussie got in bull territory right away in London, actually an hour before London. He got in bull territory, and it started to aim higher. Prior day's highs were around the corner. And like Joe pointed out, the risk of volatility was to the upside. So the report is here. This hasn't taken a direction yet. And then if you go back, like Joe pointed it out, he had a very nice breakdown, and he could go to the top of the box to test. I got out a critic. Oops, I didn't want to do that. I could have gone to the top of the box, but since I was with only one contract, I got out. I could have trailed, yes, woulda, shoulda, could have, but it's all right. We can see how afterwards, when we actually turn into FX flows up, the Aussie had a pullback, and then it worked its way higher again. But this was unfortunately beyond critical. Another markets that did move during those hours were the euro, which it moved early for us. For the American session, it actually took off early. And now I'm going to show you another trade that I did, which was the New Zealand. This is the euro yesterday. It also moved higher early, at least to target 1. It was a zone 1 play. But the euro has not been the outperformer to the upside. When we did this, right? The Aussie has been the one leading to the upside. Now the euro is in that category, but yesterday it wasn't there. So I had to look for opportunities in the Aussie especially. So that's the one that I had in mind. And the other one that moved was the New Zealand. Let me show you the New Zealand. Here's New Zealand. And why I chose the pound New Zealand. The New Zealand had at 4 p.m. at the close 2 days ago, at the close, he had rate statement. So this is rate statement. So New Zealand takes off. Boom. It penetrates the RQ channel 7, it clips prior day's highs, and it closes near the highs. Then the Aussie number happened to be somewhere around here, right? So this had a little pullback down, a little pullback, and early in London it broke out and it did the same thing. But since this was too high up, I also had the Aussie. I was doing this with eyes ahead that we would have this. You can predict this using technicals, using the extremes. That's where it might be heading. You don't necessarily need to wait for the histogram to light green for you to do a trade that requires that behavior. That's another layer. You can take this a little deeper. Just looking at the histogram, it's part one. Part two is getting to plan when the histogram is actually going to turn green. And that's what the IQ room sessions are for. Eyes ahead. Eyes ahead, we are going into risk off, even though we are risk on. You can plan that. So that was a little bit of that, plus technicals, and also crowd trade effect theory for the Aussie. So when the New Zealand was so strong during that morning, the New Zealand was outperforming everyone. It was outperforming everyone. So since I cannot trade the New Zealand on this particular day and for the past few days, the one leading to the downside has been the pound. It has been the pound. The pound has been in this lower group for a couple of days. It has been weak. It has been breaking down. So the pound has been the biggest laggard. So by matching the strong versus the weak, you have a cross pair. How did I do that? Well, I was awake in this period, right? I was awake in this period. So what I did was I started with 8 hours. I matched who was at the bottom end of the list with who was at the top end. Everything in green, I had New Zealand, I had Aussie, even the Canadian were green. The commodity currencies were green across the board, led by who? Led by the New Zealand. The New Zealand in 1 hour was the biggest outperformer, So that's when I built the New Zealand versus the pound, which it happened to be at the bottom of the list. At the bottom of the list on that night. Where is that New Zealand pound? Here it is. Which happened to be at the bottom of the list on that day. So it was actually the velocity leader of the crosses to the downside. So I was trading the New Zealand number versus the weakest currency, the strong versus the weak. I got in at the break of the Archie Channel 7, 2 and 7, and prior day's lows. When you have a signal like that, it's usually very strong. It's usually very strong. And I had a number. I got in, unfortunately, I top-ticked that exit. Before continuing all the way down to final target. That was one contract, and it was good for, I think, $650. $650. The way I built this was using leaders and laggers. Does it make sense, Joe? Does it make sense, guys? Did I lose everyone?
It's making sense, Augustine. I think that many of us are going to have to watch the video again and to be able to absorb all of this. There's a lot of information, but some really great stuff.
I agree. This doesn't come up at first, you know. But trading leaders and laggers is the way to go.
Sorry, I was
leaders and laggers. It's the way to go.
Trading velocity leaders is key. I mean, that'll keep you out of trouble when you're wrong, and it'll help you make extra profits when you're right.
Agree 100%. Agree 100%.
Augustine, you see Benton's comment there?
Agustin, please brag a little so you will seem real. Nah.
The numbers brag for themselves. The numbers speak for themselves. Might be a better word for it. Benton, were you in that short pound trade today? Good. So you had a good day. All right, what else?
Joe, there's a comment there from Ryan. You may want to check that out. You may have already seen that.
I just sent it to him. That's why I was muted and not able to reply to Augustine when he caught me off guard asking me a question when I wasn't paying attention. Because I was sending Ryan the workspace for it. But I believe what he was talking about was the importance of the velocity leaders with the velocity leaders to the upside against the velocity leaders to the downside. Am I right, Augustine? That's what you're referring to? I won't trade it unless it's on top for longs or on the bottom for shorts. If it's in the middle, it doesn't qualify for me.
Joe, do you take that approach just prior to a report, or do you wait for the report to settle in before you take that approach?
Which approach? Matching?
Leaders and laggards, marrying the two together.
Well, if you're talking about events trading after the report, sometimes they react different. But in general, I'm talking about general terms, not just FX, but futures and everything related to that. I always try to go for the leader on the way up or the leader on the way down for my selection. More so in FX. And when it comes to reports, yeah, I'd rather go for a cross after the report if there's cross currents. Prior to the report, then usually against the dollar is a pretty good gauge. Does that make sense?
Yes, it does. One more question. If you were trading Einstein around a report, how would you set that up? When would you turn Einstein on?
Well,
how would you do that?
I would not trade FX in the Forex market at the report like EP used to do with bracket trades and things like that. I wouldn't do that because they widen their spread ridiculously wide, and you could be right and still lose money. So the idea of it is, we used to do that in FX, but they used to guarantee us 50 contracts at a clip, and the spreads used to go no wider than 3 or 4. But FX was a lot different back then. There was a lot of different providers, and we used to have a pipe coming in from all the providers, and retails don't have access to that, and even institutional-wise, you can't do it nowadays. Regulation changed everything in 2000. Well, regulation kicked in, I think, 2009. But by the time we were in 2010 to 2011, they killed you on the spreads, widening them as wide enough for a truck to go through. But going back to your question on Einstein for today, what I would do is I would wait for price action to settle, look up where my RQ channels are, and then turn Einstein on, whether I'm trading 30 minutes or whether I'm trading 5 minutes. So if it broke out of, if it's still inside the box, I'm going to trade the RQ channel break. If it's already out of the box, and I'm talking about the overnight box, if it's already out of the overnight box, out of the RQ7 on a 30-minute, then I'm going to look for a 5-minute chart with the RQ channel 2. Einstein or manual, either one. You could have it on standby, and just once you can have 3 or 4 charts on standby, and once you see price action, then you go and you click it on, enable it. Richard's asking, what's the tick amount on FX? It depends on the currency. I believe the euro is 1250. Then you get into the CAD and Swiss and euro pound, and that's going to vary depending on the price, ongoing price. But right there, Augustine's showing you a Forex pip calculator. Yes, you can do that, Benton. Great thing you brought it up. Benton says he's only trading futures, not FX. You can come fairly close to creating your own synthetic, which means, let's say you want to short the euro yen, right? Well, you short the euro futures and you go long the yen futures. Contract size, one versus the other, there might be some discrepancies, but you're getting fairly close. You've got program trading that when one gets too far from the other out of the FX, they'll sell one and buy the other, then they'll unwind that trade when it becomes profitable. We used to do a lot of that, by the way. All right, guys, we're heading to the top of the hour. Any more questions? It's Friday. We've been 2 hours into it, and I don't know about you, but I'm ready for the weekend. I think it's been a good educational week. We've gotten a lot more of our members contributing in the Trade Lab through the chat box. That's awesome. Please keep it up. Does anybody have any other questions? Did everybody have a decent week this week? How are you doing for March? March has been a little choppy for me. Could have been a great month, but I missed a couple trades. I usually do better the last 2 weeks of the month anyways for some strange reason. So I'm being optimistic for the next 2 weeks. Richard, you had a great week. Awesome. Benton? Ryan, you sent me some trades last weekend. I have some comments. Sorry I haven't been able to reply. I'm going to try to catch up this weekend. Ron, Jerry?
Ron, Jerry. Guys, I'm sharing a few links. One link has the currency futures, the contract specifications. So you have the tick value. The tick value. In essence, you have pretty much 4 different tick values. The big boys are the yen, the Swiss, and the euro. They have 12.50 a tick. Then you have the commodity currencies with $10 a tick. And then you have the pound with $6.25 a tick. Dollar index, $5 a tick. $5 a tick. So I share this link in the chat box. I'm also sharing another one from bar chart that tells you a little bit more about the contract size and so. Then 2 different pip calculators for your crosses. So you can calculate your crosses. All you got to do is just plot in the cross, position size, let's say 1,000, 100,000. You go to the you go to your market analyzer, you pull out the ask price, and then you calculate the pip value. It will tell you how much it's each pip. This is a critical step in position sizing, critical step. So you need to do that. It's not that you always trade 200,000 or 200,000. You got to measure that. Sometimes you trade 65, sometimes you take 50, sometimes you take 180. It depends on the pip value and the size of the stop. So that's one from Baby Pips, and there's another one from Oenda. So you can have 2 in case you find some discrepancies for your crosses and for your FX. So I share all those 4 links in the chat box, so you can save them, especially if you're going to be dipping into FX. I use actually an app. I downloaded an app for my phone, and I have this calculator but on the phone, so I can do it kind of faster, a little bit faster. You just look for go to your application world, maybe on your Android or your iPhone, and just look for pip calculators. There's a lot of those. There's a lot of those. That's all, Joe, on my end.
All right, insiders and members, have a great weekend. If there are any unleft or unanswered questions, send us an email at support@realsquant.com. And we wish you all a great weekend. And we'll be right back here Monday morning, ready to trade, ready to rumble for the last 2 weeks of the month. I think we got 2 weeks left, right? For the month? Well, yeah, basically. Got 2.5 weeks. So time to get ready. This is the last leg of the race for the month. All right, everyone. Bye now.